What's up, guys? It's John here. I'm a certified public accountant who loves to talk about personal finance. Should I put money in 401k or Roth IRA? Which one is better for me? Which one will make me more money? These are the common questions people ask me. I'm going to go over the pros and cons of each retirement account to help you make a good informed decision. Please watch the whole video until the end so you know what to do in your situation. Alright, so a 401k plan is an employer-sponsored retirement account which lets you put a percentage of your pre-tax income into a retirement account. Generally, these funds are invested in stock, bonds, or mutual funds. There's some pros and cons of a 401k. Let's go over it. Here are some of the pros. The first one is there's company matching contributions. Generally, companies nowadays put away dollar for dollar up to a certain percentage of your contribution. So for example, if you put away $5,000 a year in your 401k, a lot of companies match that. If that's the 3% of your salary, company match dollar for dollar. They will put also $5,000 into your 401k. That's great. That's free money, free bonus. You definitely want to take advantage of that. The second pro is high contribution limits as opposed to a Roth IRA. The contribution limit for year 2020 is $19,500, which is substantially higher than Roth IRA, which I'm going to cover a bit later. The third pro is you get a protection from creditor. So for example, if you have a car loan and for whatever reason you got sick, you can go to work, you don't have income anymore, so you can pay the car loan, the creditor can go after your other asset to satisfy the loan. But your 401k plan is protected. It's a qualified plan. It will shield it from potential creditor. So that's definitely a good feature. The fourth pro is you will get free financial consultation. A lot of companies, the 401k is administered by big brokerage firms such as Vanguard, Charles Schwab, or Fidelity. And they will designate financial advisor for your company's retirement 401k plan, and they will help anyone who have questions, especially for first time who enroll in 401k. They will have a lot of questions. This financial advisor will help you establish your financial goals and help you choose the mutual funds. I'll definitely take advantage of that if you don't know how to pick your investments. So here are the cons. The first one is there's limited investment options. Like I mentioned before, companies have 401k that are administered by big brokerage firms such as Fidelity. You can only pick the mutual fund from Fidelity. Unfortunately, you can't pick a mutual fund from other companies such as Vanguard, Charles Schwab, or American Funds, because that's not what they're offering. And some of the plan will not let you invest in stock and bond as well. So that's one of the downside. The second con of a 401k is you have to pay income tax when you make a distribution. There's also a penalty when you take out money before you turn 59 and a half. The logic is the government wants you to set aside the money for long term, and it's for your retirement. And so they don't want you to take the money too early. And when you take out the money, they're taxed at ordinary income tax, because when you contribute it, you already do it on a pre-tax basis. The third con is there's required distribution at the age of 70 and a half. You cannot leave your money in the 401k forever. Starting when you turn 50 and a half, the government say you got to start taking out some of the money. So now let's talk about Roth IRA. A Roth IRA is a retirement account that allows qualified withdrawal on a tax-free basis. This is the biggest selling point of a Roth IRA. The Roth IRA also have some of the pros and cons, which I'm going to go over now. The first pro is there's no required distribution at the age of 70 and a half. You could leave the money there if you don't need it, and you could pass on to your children. The second one is you could withdraw your contribution without penalty at any time. The key word is you could withdraw your contribution but not your earning. So for example, for the past 5 years, you have put away $50,000 in Roth IRA, and he has the stock in there. It has been growing. You make $20,000 profit. So the market account balance is $70,000 now. $50,000 is your original contribution. If you take out $50,000, there's no penalty at any time. That's a good feature. The third pro is there's more investment option. Usually you set up a Roth IRA with a brokerage account, and it allows you to pick stock, bonds, and mutual funds from any company. So you got a lot of option in here. Here are the cons for a Roth IRA. The first one, you pay tax upfront. So when you make a contribution, you made it with after-tax money. The income is being taxed. It's whatever that's left over after tax. That's what you could put into your Roth IRA. So that's the con. The second one is the maximum contribution is much lower compared to 401k. For year 2020, the maximum contribution limit is $6,000. The third con is there's income limits. If you make too much money, you can't put money in a Roth IRA. Although there's other ways called backdoor Roth IRA, which I will cover in another video. But generally, if you are single and you make more than $139,000, then you can put in Roth IRA. If you are married filed jointly for your income tax and you make over $206,000, then you can put into Roth IRA as well. So which one is better for you? I personally contribute to both, and I recommend you to do the same as well. It's not all or nothing, and it's not one it's much better than the other. It all has pros and cons. So I definitely recommend you do both so that you could start building wealth from two accounts. So for example, in 1 year, you may have a super high income. Maybe you sell your vacation home, or maybe you sell stock at a much significant profit. And so that year, you want to take out money from a Roth IRA because any distribution is tax-free. The following year, your income dip is much lower and you qualify for much lower income tax bracket. Then you can start withdrawing money out of your 401k account and pay some tax on it, but at a lower tax bracket. So I definitely want you to start building both, okay? And if your company offer 401k matching, I'll definitely say that you do that as your priority. If you have limited budget and your certain amount you need to dedicate for your living expense, you cannot set so much money aside for your retirement account, but your company offer matching at up to 3% of your salary, then I will definitely say that's your priority. Put all the money to satisfy the 3% and take all the company matching, because that's free money and it's guaranteed return. Okay, I hope this video is helpful and I would like to hear from you. Put your comment below. Let me know, what do you invest in your 401k and what do you invest in your Roth IRA? Or let me know which one you like it better and why. I also do private financial consultations. For any inquiry, my email can be found below at the description section. Alright, if you like this video, please give me a like and subscribe to my channel. This channel is made for you. I do content like this twice a week, and you could also let me know what other topic you would like to hear. Alright, so I'll see you in my next video.